So a lot of people know about what's called the marshmallow test. This idea that if you have a very young child and you put them in a room and you trap them in a room and you kind of walk out of that room and you leave in front of them a nice, plump, juicy marshmallow, and you say, hey, look, I'm going to leave here, I'm going to walk away, but look, if you can just stay here and just not eat this marshmallow, what I'm going to do is I'm going to come back in 15 minutes and I'm going to give you a second marshmallow. This is a really well-known test. Everyone's kind of heard of this psychological experiment. You can get 2 of the marshmallows if you just relax, you don't do anything, if you just wait. And if you just wait a little bit longer, you can have a better result. And so some of the kids, obviously, they kind of peril and they eat the marshmallow, and then other ones have a little bit of restraint. Other ones are able to relax and they get a second marshmallow and they get a better reward. And what's interesting is, as psychologists do the experiment hundreds, if not thousands of times at leading universities, especially in Columbia, what they found was actually really interesting. They realized that the kids who were able to withstand and have the self-constraint to not eat that marshmallow, and they actually got 2 marshmallows, those kids were a minority, but those kids actually had much greater levels of success later in life. They made more money in their jobs. They went to better colleges. They had greater amounts of overall success. And in all aspects of life, the people who were able to sort of restrain themselves when they were young were able to have higher levels of success on a natural tendency as they grew up. And they do this experiment over and over and over and over again. And it became so commonplace that these little kids that are growing up all of a sudden are now naturally expected to tend towards 2 marshmallows in search of future success, whether this is in college, whether it's in careers. You literally have teachers across the country who do this test on their first graders over and over and over again because it is so highly predictive of success. But one thing that not a lot of people know about this test is there was actually a second condition that was tested for by the original experimenters. And the second condition is a very subtle condition, yet once you understand it, it accounts for a humongous amount of the deviation we have in investments in the normal economy. So that deviation was very, very simple. What they did is the doctor came in, and instead of having 2 marshmallows, he comes in, he puts the first marshmallow on the table, and then he does something very basic, or whoever it was. They put a napkin over the marshmallow. Just a napkin. And like the kid was there, the marshmallow was on the table, and they saw them come in. They saw them put the napkin on the marshmallow. But solely because of this napkin on the marshmallow, something really interesting happened. Now, when the kids sat there staring at this marshmallow, originally they were just oozing over it, wanting to eat it. I mean, it's just like a natural thing for a 4-year-old kid to want to do. But when there was this little towel, little napkin over it, the kid knew there was a marshmallow underneath it, but because they weren't able to actually visibly see it, it made the norm to not eat the marshmallow. It made the norm to resist eating the marshmallow. And you might think that, oh my gosh, these kids must be way more successful, but it's interesting. These trends that we saw with restraint leading to success later in life, these trends actually became invalid once they made this change. As soon as they put that napkin on, there was no shift, there was no change, and there was no predictive capabilities from this test. And the reason why is because the new norm became to not eat the marshmallow because it was much easier to not eat if they weren't looking at it. And because of that, a bulk of the kids didn't eat it, and then they got the second marshmallow. Now you might be thinking, okay, well that's interesting, but does it really matter? And here's the deal. While it totally invalidates the predictive capabilities of it, what it reveals is a very subtle yet massively significant human tendency. See, most people, they kind of grow up and they have their money, they have their income, they have their wealth, and they put it in their bank account, right? I mean, you gotta go and open up the easiest bank account to open, because most people, they do what's easy. They will take what's right in front of them. And if what's right in front of them is a marshmallow and it's completely uncovered, say that's the local Wells Fargo, say that's the local Bank of America, whatever the closest option is, right? Whatever the most convenient thing is in your area, for a lot of people, for a bulk of people, what they do, they take this money. Now for these kids, their default option was to eat the marshmallow. And because that was the default option, they ate the marshmallow. So for most investors, their default option is to go put it in the local bank and just let it sit there and let the bank go out and loan it to people at 10x leverage. And as they 10x leverage, get tons and tons of returns. And then in return, they'll give you a little tiny percent return. which is awful, right? That's really, 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 really bad. But that's what is immediately in front of almost every single investor on the planet. And what's interesting is most people, like, they know that, like, there's this amazing, amazing vehicle, right? Like the stock market. See, most people, they know that there's this really, really, really amazing vehicle. There are these financial markets that have like really, really, really insane returns. Like this is where the real savings are built. This is where the retirements are built. This is where the actual percent returns are manifested. And what's interesting is this is like the golden marshmallow. This is like, if you're comparing a marshmallow, like this is like an apple pie. Like this would make some of those kids go absolutely, like their minds would explode if they like saw this. But this marshmallow, these financial markets, and especially investments in like stocks, investments in equities, investments in really any kind of like sort of difficult financial vehicle where you have to have like an actual understanding of what you're investing in. A lot of times those investments are hidden under a napkin, and this napkin, I think it has two elements and two sides to it. The first side is sort of a fundamental barrier to entry. And this fundamental barrier, very simply, is that deposit requirement, or that you have to have a social security number. I have so many clients, also employees, that like literally they can't even invest in stocks because they don't have a US bank account, they don't have a social security number. How are they going to buy Apple stock, right? And then on the second level, there's the educational barrier, right? So a lot of people don't know how to invest. Like literally only half of Americans own stocks, which is insane. And like once you see what's possible with financial markets, once you see all the cash that is just waiting right here, like all of a sudden you realize like these are only like two reasons that people don't invest. It's either they fundamentally aren't physically capable of doing it, or what would happen is this curve would happen, right? You would have people that would invest naturally, right? You would have the bulk of the individuals would not be able to resist the marshmallow. They would not be able to resist investing. And because of that, a bulk of people would invest. And when a bulk of people invest, what they do is they create a tremendous amount of upside with their accounts, with their cash, because they have invested in assets, right? Like everyone would have assets. In US markets, I believe the numbers now are about 60% of all assets are held by the top 8% or the top 20%. Which means that there's a drastically disproportionate amount of all the available assets that are held by a minority. And I was thinking about this and I was like, well, why is this? And then I thought about our marshmallow example. And I realized, and then there's the other group of people who either don't know how to invest, or they aren't able to invest. And usually if you're not able to invest, then you wouldn't bother learning how to invest. And so you just don't know how to create this overarching long-term goal with assets, because you never really had a reason to. And the reason why is because the natural behavior, just like in our marshmallow experiment, the natural behavior changes when you very, very subtly hide. So for the marshmallow, they put a napkin over it. Like the kid knew there was a marshmallow there. The kid knew it would taste amazing, but it was a lot easier to resist it because, why? Because there was something very small that was hiding it. And it's the same thing with stocks, the same thing with equity, the same thing with all financial markets, same thing with assets. Like people know that I should probably invest, I should probably have these assets, and it would make me a lot of money in the long term to do this. But there's just that little napkin over top that makes it a little bit, to learn about it, a little bit inconvenient to actually go and open up. I literally spent like an hour, I spent like probably yesterday at the bank. I went in to cash some e-bonds, and I was waiting for 2 hours to make this transaction happen. And I was opening a brokerage account recently, and it took me like an hour and a half to get all the documents I needed to open up the account and like actually submit them and get everything set up. And like it was so much stuff, I couldn't believe it. And for so many people, just that little bit of determination, like that can push them away, that little bit of halt thing, even if it's something small, like a little napkin over a marshmallow, that napkin takes 2 seconds to pull off. But solely because it's there, what you realize, and this is the big shift, is that it's not that tough to pull up the napkin. What you realize is that it's actually like pretty simple. All you have to do is just reach out and pick up that napkin. Now whether or not you eat the marshmallow or you wait 15 minutes is totally up to you. Statistically, you should wait 15 minutes because it will apparently make you very much more successful in life. But the big problem is a lot of people, they don't realize that there's just this little napkin over financial markets. They don't realize that if they could just get the education, like they could have success in investing. And it's really, really simple once you know what you're doing, right? And so that's sort of the big game changer. That's the big shift. And I think this would stop a lot of people from investing, is they don't really see that like this is right in front of them. These markets are just waiting to be like expire. They're just waiting for you to leverage them so you can make tons of money and have ridiculous amounts of free time. And all you have to do is to just make that first investment and to tear that napkin off, just like you would break into any new thing by just doing it. And that's, I think, really the big shift and the really big takeaway from the Marshmallow Test. That sort of the big guys on Wall Street, the big people on top, or whoever runs the brokerage or the banks or whatever, AML, KYC laws, like having to have all these documents and stuff has reasonable limits, but it goes to an extent, right? You can't force people to do so much that it deters almost a majority of the population not invest. I mean, that's awful, right? And that's kind of what you see happening is a lot of big guys are, I don't know if it's intentional or if it's not intentional, but they overcomplicate financial markets. They make it too difficult to open up an account. They make it just super complicated once you actually do invest to understand how your investments are performing and understand sort of how the projected future growth is actually going to be by constantly berating you with news article after news article after news article after news article. Like if I watched CNBC for 2 days, I would probably I don't know, I would definitely have a headache. Because there's so much noise, and that noise comes to do what? It comes to make investing look complicated so that the people that are here, the minority that are doing the investing, make themselves look better, make themselves feel like they're doing more, but in reality, they're doing the easy crap, they're eating the easy marshmallow, they're just hiding under this napkin, right? And that's, I think, the big shift, that's the big difference. And so to sort of overcome this, I think really the most important thing you can do is just educate yourself on personal finance and investing. The moment you have that, all of a sudden this napkin, it's literally taking a flamethrower and shooting it at a napkin with a marshmallow under it. You're gonna make some amazing s'mores with that marshmallow, and you're gonna disintegrate the napkin in fractions of a second. And I think it's really the key and the cure for it is to have that financial education. So definitely a really cool epiphany that I kind of extrapolated from this Marshmallow Test a long time ago, and I think it has a lot of relevance, seen a lot of application in current financial markets. Especially with investing, especially with the market right now, it's no one, this is the opportune time for people to be getting into investing, and still you have such a huge amount of people that just can't see under the napkin, even though they know mentally what's under the napkin, because it's not right in front of them. You can't visually see it, and you don't want to actually go out and take action. And for a lot of people, they just don't want to take action to get the results, so they don't get the results. And so that's probably that's the big message. So, like I said, thank you so much. We're getting a ton of value out of this training. If you want to actually go and take action and get educated in personal finance and investing, make sure to click the link below or go to 90noonsecrets.com and get a free copy of my best-selling book, 90 Noon. It will change your life. It will give you all the secrets that the uber wealthy use to absolutely crush financial markets. And you can have it for free, which is super exciting. So, like I said, thank you so much. And please, do not fall victim to this napkin, and definitely make sure you get whatever education you need from myself or from others to actually go out there and absolutely crush it by accumulating assets. All right? Cool. Peace.